Hey there, welcome to the South Florida Mortgage Report. This is actually our second one this week. It's Billy May, your hat dude wearing mortgage guy, with Craig A. Garcia, the president of Capital Partners Mortgage. We're going to be talking about mortgage rates and a little more at the end of the podcast, but really we're here to we have a special guest today, a wealth of information. His name is AJ Yolofsky. He's an attorney. And our episode kind of title is going to be Protecting Your Real Estate Business in South Florida. And let me tell you something about AJ. AJ, first, welcome to the podcast.
Thank you so much for having me, Bill. It's great to be here, Craig. This is going to be a lot of fun. Thank you.
Yeah, absolutely. AJ is a Marine Corps veteran. I'm a Navy veteran, so of course we have to have a little fun. He is the founder of Yolofsky Law. He's an estate and planning business firm. It's based in downtown Fort Lauderdale. Now, he blends his military discipline with an entrepreneurial strategy to help professionals, especially small business owners, especially realtors, to build and protect legacies. He works with agents, investors, entrepreneurs all over South Florida to help structure their business, safeguard their assets, and prepare for growth. And why should real estate treat their work as a business, not a profession? And some of the things he's going to talk about is kind of like, what are some of the legal risks as a realtor, liability, contract, et cetera, et cetera? And what are the best legal entities? Do you do LLC, S-Corp, PA? There's enormity of things he's going to talk about here. But I also talk about the importance of clear contracts and your liability insurance. So really, really good stuff. So really, without further ado, we're going to kind of launch in. We got a nice structure. We're going to talk about some really, really cool stuff. So Craig, go ahead and take it away, my friend.
Well, yeah, thank you for being on, AJ. I appreciate it. And honestly, it's Veterans Day week. And so thank you both for your service.
Thank you for paying your taxes. We appreciate it. We got to do some fun stuff. Well, I'll tell you what, if you're working with me and people I can refer you to, we're going to take that tax bill. We're probably going to do that, but we can get to that later.
Oh, I like
very
the sound
cool.
of that.
Very cool. So actually, we're really excited to have you on. A lot of the listeners of our podcast are real estate agents. One of the questions that was coming up was, what are the biggest legal risks that you see real estate agents? What do they face? The biggest ones.
It's a great question because real estate agents, something, Bill, you said at the beginning, right, about being a profession or a business. And actually, the best realtors I've worked with do both, right? They treat their operation as a business, but then they raise their level of expertise and they do the continuing education and learn enough to really engage with guys like you to be a professional and not just like a side hustle. So when we're thinking about those folks who have now elevated themselves, because as a realtor in a group, in some of the large groups that exist, your liability is pretty low. It's when you expand in and you start seeing the opportunities and the realtors who make that transition from pure agent to investor. And they start doing a side deal. A quick story, I had a longtime client, a realtor sort of stepped a little bit above their pay grade and started taking on money from clients to flip houses. And so these were big numbers. These were, $100,000 to $500,000 at a pop from people to then, hey, I'm going to buy a property in this entity and then we're going to renovate it and then I'll pay you back. Well, that just shifted the whole thing off of being a realtor to come under the purview of the federal securities laws. All of a sudden, that's a whole different ball game now. And so when we're thinking about this, when we're thinking about the risks that we expose ourselves to or that realtors have, is each time you level up the practice, think about what else is going on, who else is involved. And if I'm involving more than just whether it's a simple buyer-seller residential transaction, boy, if I start having to have a bank involved, independent, that common sense kicks in and says, hey, maybe I need some help here.
Yeah. Boy, I can see where you open up a whole can of worms there.
It was a big one. It was a big one. It was ugly. That particular situation, fortunately, we were able to resolve it without any courtroom litigation. But the reality is that there were some sizable misrepresentations by the realtor. And what it looked like in that case was that the realtor was taking money from new clients to pay the increase in costs on the last deal. because we all know that renovation and contractors, God bless them, it's tough to deliver on time. It's tough to deliver with when you're running subcontractors. And let's say everybody here, everybody on that construction side is above board and operating cleanly. Supply issues, who knows? And so the realtor fell behind in keeping those deals running,
Boy.
then taking money from new people, now having to go out and find that third deal to finance the second. You see how this could really get worse. So there's so many. What's ultimately happened is there's so many pitfalls for the unwary. Is sometimes people they don't know what they don't know, and they don't know that they're stepping into a massive pit.
Uh-huh. That's it. That's interesting. Um, and that sounds like you probably had like maybe an experienced realtor that kind of maybe took off or bit off a more they can chew. But so let
That's
me ask you,
exactly it. Yeah.
what for some of the more common realtors, let's say somebody a realtor in business for maybe 2 or 3 years, and now they're closing some deals, they're starting to grow their
Yep.
business. What are some
Good.
of the challenges that when they're trying to grow their business, maybe that they don't really think about from a legal perspective that you could address?
I think really the thing that they're probably missing is using the structure that they've created. You prefaced early about, do I do an LLC? Do I do a professional corporation now, or professional LLC? Do I elect S-Corp treatment? And one of the big mistakes I see people make is they come in and I say, how are you organized? They say, I have an S-Corp. Okay, great. That's a tax structure. You could be a corporation, you could be a LLC, and you can be taxed as an S-Corp. And so where this sort of falls down is they're not using that entity to its greatest capacity. And that means the entity is separate from them. Now, of course, the Florida Realtor Board of Realtors, excuse me, you can only, if you're going to practice real estate, you must do it in your own name. That must be the name of your PA. And you can use a doing business as. So we know some groups around in and around. You have folks, and I'll leave some names out, but you have like basically, and if any resemblance to anyone in particular is not intended. So you might have somebody who's, we'll say, the Johnson team, right? Or the Johnson Palm team, because we're in South Florida. And then you might have someone else who is who they're organized as their name. So for me, it would be, I'm Joseph A. Yolofsky, right? PA, if that was it. But I'm doing business as the legal landlord. I don't know, right? Creating these little steps. So let me pull it all together for you. Using the entity to do your contracts with your office space, right? That separates your liability. So from the landlord, right, who is leasing you the office space, and you personally. And people just go and they say, well, I need a space. I don't have an entity. And they just sign their name. Well, you kind of missed it there. We're going to do these promo materials. We're going to do, maybe you go and they lease a car, or they buy a car, right? And quick tax tip for all those folks who want to jump into what's called a Section 179, right? So you want to get your car, let's say a G-Wagon, and you wrap it. And there's some really cool ways to do this. And then you take the depreciation off of it. Well, I bought it in my name because that's what the dealer said to do. Yeah, oops, you just missed the opportunity to put this depreciable asset in your business. So the risks, a lot of times we think about risk as that, oh, my client is going to come after me. And it's not. It's the other things that realtor is doing as they're growing. Get it out of your name. Use that business name. Make sure you use that business name. And most of all, sign it. This is important. Sign for your business as the president if you are a professional corporation, or as the manager if you are in an LLC. And by the way, quick tip, if you are setting up an LLC, get the help of an attorney. If you want to do it yourself, great. Set it up as a manager managed limited liability company. You'll thank me later.
So you mentioned something there about buying the car. I think
Mhm.
some realtors, they go to talk to their accountant first, about setting it because they're
Right.
trying to maximize the tax,
Mhm.
issue and stuff. But I mean, they really should be talking to you first, right? Before they talk to.
This is part of, so this is part of the financial team, the advisory team, that as you're growing, right, that you need to have. So quick benchmark. When should I elect S-Corp treatment? Right? You have to if you do it immediately, you have to do it within the first 75 days of forming your company. But you can also do it in a subsequent tax year early enough. So what happens is that accountants in the marketplace are a bit more accessible than lawyers are, right? And it happens. It's just a little bit of people, people come to attorneys either for different reasons. People do, especially getting started, people talk to their accountants first, or they have a friend, right, or their broker, or someone like you, and they say, who should I talk to? And they say, well, get yourself straightened out. And the CPAs, the accountants, come in and say, I can set up your entity for you. And they can, just like you can, right? But is that accountant going to get into the deeper details? Probably not. It's not a dig on them. Can I do a tax return? Sure. Do you want me to? I don't know. Probably not.
Right.
But what happens when we work together? What happens when you get the methods that we think, and I've talked about this with many accountants, and I know there's going to be some that spear me for this. Most accountants are trained to do two things. They're trained in compliance. If the tax code says something must be perpendicular, right? A T must be crossed perpendicular. That's exactly what they're going to do. A lawyer is going to look at it and say, well, all it says is that the T needs to be crossed. So we have some flexibility there. Now you get a higher level of service. Now you get collaboration that just brings everything up. So should they come to us first? Yes, probably. Because we're on the legal structure. Lawyers are going to be far better at positioning that realtor or anyone associated with the realty industry positioned for future growth.
Good stuff.
Good.
Um,
And AJ, let me ask you. So, I mean, some of the stuff you're talking about with structures and everything is regarding reducing, risk, in their
Yes.
business.
Yes.
Are there strategies that like any agent can use to reduce the risk in their business today?
Okay.
Yeah.
So there's a few, right? There's a few. I'm going to throw a question back at you, which is, what is the goal of this notional realtor that we're talking about? Are they
Okay.
looking to simply grow and be a part of a particular team and be the star producer? Or are they looking to say, hey, I have a side hustle because my spouse is a, whatever, and I need a business that I can be flexible with so I can be there for kids or for family or whatever. Or is the third option, is it going to be, hey, I want to grow this thing, I want to scale it, and then I want to sit back and be the CEO. I want to sell it. De-risking the business is going to look a little different in each of those scenarios. As a general rule, putting a solid foundation in place is going to give the best foundation to launch into any of those.
it makes sense. I think with some agents, especially when they're newer, they're just trying to, they're trying to like drink water through a fire hose, so to speak, to use the old military metaphor. So they're overwhelmed with that. I guess I would say as a newer agent, like, uh, how do I come to you? And is it a one-time thing? Is it something that you kind of form a partnership with? And how often do we have to
Yeah.
talk to you? You know what I mean? And I
So
think some realtors might feel like, oh, I can't afford to do that. You know what I mean? But maybe
yeah,
you can't afford not to do
that
that. Right?
it's a little of both, because and I hate, what's the classic lawyer answer? It depends, right? It just drives everybody nuts. If you're starting out as a realtor, and you want to you want to be a professional, right? You want to level up. So getting yourself organized is probably something we can solve in 30 minutes. And any attorney who practices in my field can probably do the same thing. What I'm saying there is, you don't want me unless it's an absolute emergency and only for about 5 minutes, right? God forbid you get arrested, don't call me, because all I'm going to do is say, hey, call those guys, right? Or
Yeah.
call her, because they do it every day. So know who you're working with. And same with expertise, right? So get organized. Once you're organized, once we've got you kind of on that initial uh, track, you're going to be in really good shape. And maybe we only have to touch base once or twice a year unless something weird comes up, right? I don't know how to handle it. A financial benchmark for a realtor, for just about any business, which is when to elect what's called S-Corp treatment. We talked about it a little earlier. The benchmark that I use is once you're at $150,000 of income, now you really need to start thinking about S-Corp treatment, whether you need it or not. So if you're not there yet, go online, go to a financial calculator and say, hey, I'm earning this. Does it make sense for me to be an S-Corp? So with that starting point, you're in good shape. Once you're now busy enough, whether it's you're representing sellers and you're getting the listings, and I know we have that whole thing with commission payments after that realtor, sorry, what is it? The
Buyer
MLS
broker
case.
agreement.
Yeah, right. Is I need an assistant. Having an assistant, right? Have you guys heard of the book "Buy Back Your Time" by Dan Martell?
I have not.
Worth your read. Where everybody who's listening to this podcast, if you're looking to level up your thing, "Buy Back Your Time" by Dan Martell. It's a game plan. Do the things that produce that are the highest and best value of your time. As you're growing as a realtor, answering your email, probably not very high. Answering that initial phone call, probably not a good use of your time. But I want to be accessible to my clients. Sure. That's why you can have a business number and a personal number. Getting that agreement in place with your assistant, come back and talk to me. And so for that first year, 2 years, as they're growing, depending upon how fast people scale, we know some people in the industry who just like come out gangbusters. Awesome. We're probably talking a little more often. But the idea that a good advisor relationship is someone who's going to answer the quick phone call, answer the, hey, what am I supposed to do here? Hey, do it this way, without sending that bill for 5 minutes, right? A good advisor will help build trust both ways. And you guys know this from, you guys know this from what you do.
No, great stuff. I'm gonna have to go on Amazon after the podcast and order that book.
I like it.
I tell you, like I read a lot of books every year, a lot. My team, if they're listening to this, they're going to chuckle about it. And there's so much good information out there, and how few people, if you look at the statistics of how few people dedicate themselves to continuing education and continuing growth, you get ahead. Once you start getting ahead, there's somebody else who's hungry coming behind, but you're going to level up. So there's a whole slew of books, and we have a reading program inside my firm because we're always looking to stay ahead.
So since you brought it up, what's maybe one of the books that stands out that you've read in the last 12 months?
Love it. Well, there's a few books that I read every year, actually. And the reason is that I always get something new out of them. The one that I think is most applicable for your listeners is Never Split the Difference by Chris Voss. It's a book on negotiation. He's a former hostage negotiator. He's built kind of this little niche empire of sorts. He's a frequent speaker. I've been to live training with the Black Swan Group. And one of the interesting things is I went to a training in Orlando a few years ago. There were 50, 60 people there. I would say 70 odd % of them were in the real estate industry. And negotiation, right? What do you do? What's the biggest thing you can do for your clients? Everybody can tell you how to get a photographer who's going to handle things. They're going to talk to you about marketing. But when it really gets down to those brass tacks, the negotiation, how to price effectively, how to bring in psychological concepts to the negotiation. And let's face it, right? We're in a sales business and we want to win, right? We want to maximize the value for our client. So if you're a younger realtor or in the real estate industry, and you're representing a lot of buyers, because that's how most realtors start out. Yes, you can learn how to powerfully negotiate to lower the price that your clients are paying. You got to learn the techniques though. And so that's one, you want to have a conversation about that book. We could talk about that
No,
again. I train this every year. It's mandatory reading for my team. I've used it. There's stories on my website about how we've used these techniques effectively, and it's kind of a punchline to it. I was doing a real estate deal helping with a real estate deal a few years ago, and I was representing the buyer. I was buyer's attorney, and it came back, and I said, they asked my client to just eat $90,000, low seven-figure deal. They said, look, we're $90,000 apart. Whatever. It's like it's pennies over the course of the mortgage. And I said, yes, that's true. You have a good point. Remember the last thing though was that you said for us to present our last best final offer. That's what we gave you. If that's $90,000 short, it's $90,000 short. We don't have anything else. I didn't counter, right? Didn't hedge, and certainly didn't get emotional about it or anything like that. It was just straightforward recitation of the facts. Took about 6-7 hours. That's not a joke in today's. Sorry, dang it, I did that. Didn't mean to. 6, 7, right? You have kids.
I don't know what that is. I have to
Good. Just stay out of it. Good. Stay
headlines.
out of it. Stay out of it. Stay out of it. Stay out of it. You can cut
Okay.
that, right, whatever. But
Right.
realistically, it took the better part of a day for the seller's attorney to get back to me, and seller dropped it. They ate it. They ate it instead of my client eating it. And I would not have done that. I would not have known how to do that without all that training. I've been training in that system since 2017.
So
Without the training. So highly encourage that book.
no, training is everything. And it's funny, I talk about newer realtors, and this morning I get this reel on the social media from a newer realtor, and it's like a 3-minute piece about this guy saying, "Oh, you could buy your house, you could flip it into an LLC, and then you could assume the loan, the LLC, and everything." And I said to I just responded. I said, I don't think this person really has the authority. Amazing
Yeah.
how so many people just go on to TikTok and they read these, they hear these things for 60 seconds or 90 seconds. And I mean, I can't imagine you would fall for that without talking to a
Oh,
professional who's actually, study this and learn this. It's
all right.
amazing.
I'm glad you brought that up because there's something going around on social media. And it's the idea of I put everything in a revocable trust, so I own nothing.
Right.
I have no nice way of saying this, right? Anybody who follows that advice is a moron because a revocable trust is simply you, right? If we create a trust, a revocable trust is typically it's an estate planning device to keep you out of probate, to deal with issues that might come up if you become incapacitated. And it's the plan, right? A quick estate planning pitch. A trust works during your lifetime and after you pass away. A will only works after you pass away. Done. A revocable living trust is you. It uses your social security number. It is it is completely transparent to the property appraiser, to the county. It's just you. Now, there's a special type of revocable trust called a Florida land trust, which is a whole other topic. And a land trust is in fact a revocable trust. However, the Land Trust Act says that the land trustee only holds legal title to the property, but all beneficial title stays with the beneficiaries. So in other words, if we have Hat Dude, love that, Hat Dude land trust, but the beneficiaries of that land trust are Craig and Billy, then what sits in the property records is the Hat Dude land trust. But then Craig and Billy are individually responsible for everything else that's going on. Land trust is a sophisticated tool. So when we get to TikTok, it's so bad. It's so bad, right? It's so bad. It's horrible. So you want to de-risk your business? Don't take legal advice from TikTok, even from lawyers, right? I have a colleague out west. She's phenomenal. And she puts out a massive amount of content, like 2 million followers or something like that. What she's telling people is accurate. She is solid on her knowledge, except it's a 30-second video. There's no way that she could communicate all the details that she needs to tell people. Her name is Law Mother. She's phenomenal. Um, there's no way to communicate all the details that are necessary. So do that at your own risk.
Yeah. Yeah. Well,
Yeah.
we just, I've seen that. I'm sure, Craig, you've seen that too, where you see these, these videos, people, I'm just saying to myself, why would you, it's just clickbait. I just say
It
it's
is.
clickbait. They're just
It's
trying to get
clickbait.
people clicks. We want clicks too,
It's
don't get me wrong, but,
entertainment.
Yeah,
It should be looked
entertainment.
at
it
as
can be.
entertainment and not
It,
advice.
it can be. It really can be. There's a reason that we're all professionals in our fields, and I've developed a little bit of knowledge in mortgages and loan underwriting and qualification and things like that. But do I know how to make an application look so good that no underwriter can turn it down? No, that's what you guys do, right? So when people start embracing a realtor point, if you're a new realtor, go take out an experienced realtor to lunch. Take these guys to lunch, right? Take them to lunch. That lunch price of quote, pick your brain, you will launch yourself so far ahead of everybody else. Talk to everybody you can, collaborate when you can. You'll be so much further ahead when it comes to it.
And partner yourself with a great attorney.
There's some really good folks out there. There's some solid attorneys out there in everything they do. It's when any of us, same thing, when any of us try to start cross pollinating and saying, oh, I can handle that. Mm-mm, nope, don't do it.
Hey Jay, this is a little off what we were talking about, but
Love it.
something that I've seen a bit of recently is these. I've actually seen lenders promoting that they've got these down payment assistance programs for borrowers, but
Okay.
and that don't have any payments, right? But what is actually happening is they're doing kind of an equity share, with the owner of the property, where they're actually coming in and they're saying, so they're going to give them 5-10% of the down payment with no payments, but now they're
Yeah.
kind of a co-owner of the property.
Ooh, I did not know about this, but let's take this apart. Let's have some fun. Let's have some fun and take this
Sure.
apart. All right. I'm going to throw in a quick plug for where we started. Things to worry about.
Yep.
Anytime if you organize an entity, and let's say that entity is Craig 90% and Billy 10%. Craig, I got news for you. Because it's equity, you are beholden to taking care of Billy in that company, in that organization for the life of the organization. And Billy, you could completely screw up Craig's life with that. Right. And people overlook it. They're like, oh, I'll do equity. Right. And we see this a lot where you might, a realtor might hear from a developer, like a developer starting out who might buy a multifamily or something like that. And say, you know what? I can't pay you right now, but I'll give you 10% equity, 20% equity. Let's remember that 20% is zero. And what are you buying into? What are the risks you're buying into? Equity is a really dangerous concept. Now, for the individual home buyer doing down payment assistance, for that, if that's a single family residence that the person is planning on living in as homestead, what is that going to do? What is that going to do to their ability to get homestead on that property? Off the top of my head, I don't know. Right?
I don't know
It's
either.
going to be messy.
Yeah.
It's going to be messy, and heaven forbid that person passes away next week. That lender is going to have some problems if it is in fact declared homestead property. With respect, for the lender themselves or for the borrower. So that means you're effectively doing like 100% financing, which
Potentially, they probably have to have some skin
okay,
in the game.
all right,
On top
but
of that, but yeah,
okay, but wouldn't that also create like a worse situation for the borrower because then they're even more upside down on the property than they could be? I don't know. I don't know what the numbers are. Um, I think there would be issues with that if they have to do any sort of major improvement. They got to put a roof on. Right now, what? if they have to clear title for any reason, what are the title folks saying about this stuff? Because I'll tell you what, um, there are detail people in the world, and then there are title folks, and they I think they could actually find the needle in the haystack because they would be capable of like separating each piece of hay. I haven't met such detail oriented people except when it comes to title. So
We can
there's
introduce you to the underwriters.
yeah, yeah,
True.
exactly, right.
Yeah.
Exactly, right. Oh yeah,
Yeah.
I get it. I get it. So this idea of down payment assistance, as with so many things, it sounds good at the outset, but when we get to step 2 or step 3, now what? Because if down payment assistance, and are these third party people, or is it like is it a lender saying it?
It's
Like
usually
like
tied in with it's usually tied in with the lender, and so it's I have a personal opinion about those types of things. I mean, they're
yeah,
kind of selling the person on the idea that, hey, it's going to keep your monthly payments low for a piece of the equity in the property, but the whole beauty of being able to borrow and you own the property is
hmm
just that. That's the whole point of owning it, is so that you can, that upside is yours and you own it, and the lender is not, you're not beholden to the lender beyond what you owe them, so.
I guess it's going to be like how are they taking title? Is it something in the loan covenants, right, that allows for a different type of foreclosure or something like that? What happens, as with so many properties here? Um, what if it's a condo? What if it's a homeowner's? Because if they're taking a percentage right now, do they have to be admitted to the association? Does that create a
Yeah.
whole other issue? It sounds
We've
interesting.
seen
I
it.
just wonder what the details are.
We haven't gotten into selling those products. I'm not really
hmm
excited about that. And, but I was just curious if you had
So
seen
if
anything from
you're
your.
so here, de-risk the situation, right? De-risk the situation. One of the things, if as a general rule, if I'm ever worried about something coming back to bite me, right? We're in the sunshine state, right? Sunshine is the best disinfectant. So I'll use an example from law. I have a client who's going through a what turned out to be a rough divorce, and the reason is that my client found out that the social network that the client was a part of completely disappeared once the divorce was filed. Apparently, all of the social network was the former spouses. So the client is beside himself, right? And he doesn't know what to do. He doesn't know where to turn. They have a young child. And the client says to me, he's like, I don't know who I can trust. And I need somebody who can step in if necessary, like whether it's power of attorney kind of thing or healthcare power of attorney. And the client's like, so I don't know. I don't know who I could trust. Now, the client has an attorney from where they moved from. We'll just say it's Illinois. And I said, okay. I said, you know what? I said, I've talked with that attorney before. I said, how about this? Because, and there's a lot of conversation that went into this. And I said, I would be willing to do that if the attorney in Illinois would do it with me, that we're 50-50. Right. Now, in this type of a situation, I bring it up because in order for me to do that as an attorney, I have to then provide a disclosure. The bar requires me to provide a disclosure to the client that says there are other people who could do it. I've told you there are other people who could do it. You can go get an attorney to advise you whether or not this is a good thing. And after all this, I've disclosed to you, and that's the punchline here, disclosure. If you give someone a written disclosure of whatever
Yeah.
it is you're concerned about coming back to bite you, and they sign it,
Yeah.
and you didn't force them to sign it. This isn't like a click wrap, which we have with downloading apps and signing up on websites. Real plain and simple. Look, hey, Bob, here's this down payment assistance thing. It's a newer program. It might work for you. I encourage you to get legal advice about it. I encourage you to get your accountant's advice about it. I'm presenting it to you. I'm not saying if it's good or bad. Here, take this piece of paper and come back to me in 2 days, 3 days, whatever. Now, if they sign it, you've checked all the boxes for making a disclosure, making a written disclosure. They've now known about the disclosure and they are making what we call a knowing waiver. Those are key terms, knowing waivers. And they sign it, you are in the clear. So realtors, all the way back to that first question Billy asked me, what can you do to protect yourself? Disclosure, 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 disclosure. It doesn't get better with time. Do it up front. Get it signed, right? Not electronically, not with HelloSign or Dropbox Sign or anything else. Get that handwritten. There's a couple forms in my practice that we use, and we only ink sign them, only. And they are some of our disclosures, right? And conflict waivers.
Okay.
That's how I would, there's a whole bunch of like kind of quote free advice in this conference, and this is one of them.
Cool.
And you can write those yourselves. Right? Like folks, you can write that stuff yourself.
Yeah. Actually, I was going to say, if you've got something specific that you want to acknowledge that you've gone over with somebody, you could probably use some AI assistance and get that into some kind of a document really quick.
Yes, you can. Quick thing about AI, and we know this, right? Because it hallucinates. It knows what it knows. I'm going to throw a quick another book plug in there. I'm reading it right now. It came as a recommendation from a mentor of mine. It's called Primal Intelligence by by Angus Fletcher. I'm only a little bit into the book, but one of the big things he's tackling is why humans are going to continue to outpace AI. And it's because we can fill in blanks that AI can't. If you're going to use AI to help you write legal documents, it's going to get you generously, it's going to get you to maybe the 65, 70% solution. You have to get really good at prompting. And then you also want to use multiple AIs to do it. That might get you to 75%, right? Then go see a lawyer. Be an educated client. Come to us with, hey, I did my research. Don't tell me how to do it, because probably I've got a little more experience than you. The same way you guys, right? Same when someone comes to you and says, hey, this is my situation. I read about this product. Key question, does it apply to me? The AI says it does, but you know better. You'll help me navigate it.
Yeah.
And this is a situation. Can you get it right with the AI? You'll get damn close. Key thing is that the person is acknowledging that, and use this as your prompt, like pull this text down. Person is acknowledging the disclosure, that they have had time to consider it and are still signing it anyway.
That's good.
Yeah, that's great. Great legal
Learn
advice.
prompting, learn prompting, learn prompting,
Absolutely.
learn prompting, learn prompting.
Absolutely. That's
Awesome.
great legal advice. Yeah.
Great. Yeah.
And
I have to say this. Sorry. I have to say this quickly. I have to say this. Nothing that I say during this program can be considered to be legal advice appropriate to your situation. In any type of a question, make sure to consult with a licensed attorney. There are things that I have said that will get you towards better legal advice over the course of time. However, use any of this stuff at your own risk. Thank you. All right, good.
All
A lawyer
right,
forgetting disclosures, right?
Yeah,
Can't
we
forget
got
that.
got to do disclosure on the podcast. Actually, be careful what kind of words I use.
Yeah, oh, by the way, no attorney-client privilege is formed by listening to this podcast. Anything you say can and will be in the comment section, can and will be used to your benefit, or maybe against you, or maybe by one of your competitors. So consider before you comment.
That's great stuff. I was kind of summarizing kind of like some of the things on our show notes, our show prep, and it was kind of like what are three takeaways that today from the podcast from the realtors that you want to like, hey, what AJ, what are like three things if you're talking to the realtor partners here in our audience, like what should you take away from this?
Take away from this as a realtor. Number one, get on a solid foundation first. Once you get organized, it's going to be easier to build off of that. Okay. Politely question everything. Just because someone says to you, this is how we've always done it, doesn't mean that it's correct. Where that comes in, I tease my accountant friends with this, right? Is that I told you earlier about compliance. The other thing is about accountants is that they are the financial journalists, or they are the journalists of the financial world. They tell you what happened. The really good ones are going to help you plan for the future. So if you're paying a lot in taxes, do you have to? No. Everybody's situation is different. There's a lot. That's a whole other discussion we could have. Third, once you're on that foundation, once you've learned to politely question everything, is to build, right? Build. Get out there, get aggressive, build. People like me are here to support you. The attorneys that'll tell you, it's too risky, don't do that. Get a second opinion, right? We're here to help you build. And so things like whether it's legal, accounting, wealth management, bookkeeping, insurance, whatever it is, the solid advisors are going to help you build your practice. They're going to help you build to, like I said earlier, be that superstar on an established team, be that stay-at-home parent or caregiver, right? The side hustle concept, or they're going to help you build your empire. And I'll tell you what, right now, there is a realtor in our South Florida community who is a success story to themselves, who broke away from an established team and has just lit the world on fire, quite frankly. So great job. And the amount of time that I've spent, I'm the attorney, the amount of time that I spend with that realtor on their business, 10 hours a year, maybe, because we got the foundation in place very early on, and they're 4 years into it now.
And killing it after 4 years. So that's a pretty cool thing.
Return on investment. We talk about it with the properties. Let's talk about it with what you get from your advisors.
Yeah. No,
Awesome.
that is a rarity in our business. We see that I don't even know if it's the 80-20 rule. I think it's like the 90-10 rule in our business. I mean, only 10% of the people are really doing that kind of business. It's really quite astonishing, actually, and because they're not setting themselves up initially from the start with professionals like yourself, in my opinion.
Oh, it's it. Yeah, thank you. Real estate is an opportunity for the people who get out there and treat it as a profession. Even the people who do it part-time, who do it as like a side hustle, when I say a side hustle, I mean, it's because they have other commitments, not because there's someone like me and I'm doing real estate also. I'm talking about if you treat it like a profession, it's going to function like one. And you will be better than the 10 other people who have their license that are in your neighborhood.
Awesome.
Absolutely. I mean, I always when I talk to the realtors, I always let them know, hey, like, you're like the captain of the ship. And, you have to partner yourself with a great lender, great inspection company, great title company, great attorney, because
Yep.
you have control of the transaction. When people go to buy a house, they're not coming to me first to get a mortgage. They're going right to the
No,
realtor. So you
but you
really,
also know.
yeah.
Sorry, I interrupted
No,
you.
no, go ahead,
You had
go ahead.
that pause. I jumped in. I'm sorry.
That's okay. Yeah. No, I
You
mean,
have that. Right? Sorry, we're doing this again. Yeah, I'll say this quickly. There are people who have come through. There are realtors that you've worked with over the years that when you get a call, when you see that on your caller ID or you get that email, you know that that's going to be one heck of a fun deal to work on, and it's going to be profitable for everybody. And you also know the ones that you go, oh God, right? Because it's not teed up for you well. The folks that set you up for success. Hey, realtors, set your professionals up for success. Set these guys up for success, right? That builds your reputation. That builds your referrals. That catapults you off this launches you off this great foundation that we've been talking about today.
absolutely.
Well,
Absolutely.
that's great.
I had used the captain ship metaphor being in Navy and everything. You know what I mean? So,
You know what? All right. We're going to get to that part of the conversation now. So those of you who've hung around long enough, look, I'm a Marine. I did 2 deployments on Gator freighters out of Camp Pendleton, San Diego. And we really, truly appreciate our Uber drivers. You guys are wonderful.
Ivan said that's what he's going to say. So, yeah.
Yeah. Hey, you house us, you feed us, you take us where we need to go, and then you bring out the really good food when we get off the ship. We know how this works.
It's all good stuff. We love it, but no, I love getting together with my Marine friends. There's such a mutual respect.
Absolutely, 100%. I tell you, the stuff, the things that sailors do to keep those ships running, operating at the level that they have to be at. There's so much inter-service rivalry that is generated out of mutual respect for the jobs that we do.
Absolutely.
And it really is. There's a concept. It really is one team, one fight.
Yeah. Just kind of like, listen.
But yeah, you guys do drive the bus really well.
Yeah. But kind of like us partnering with our realtor partners, that's whole part of the team concept. And that's why, as
Exactly.
a realtor, it's your whole team, that you're presenting to your clients, and that's why you want to have a unified front and be all in sync and be professional. And that's what we're here about. And that's what we're trying to provide this great information to our referral partners.
Yeah.
Fantastic.
Yeah, no, this has been great. Anything parting, AJ, that you would want
Yeah, let's
to?
do this again. Let's do this
Okay.
again, right? Because
Yeah, this
we're
is
going to
great.
see here's some things that are happening right now, right? So and some of these could be a discussion in themselves. One, we've got one big beautiful bill, right? Which for those of us who are old enough to remember Schoolhouse Rock, the animators are going nuts right now that we have a bill that is now called an act. If it's a law, no, it doesn't work.
I'm just a
There are so
bill.
many good. That's right, but now you're a law, but still called a bill. There's some really good tax opportunities inside of there. Capital gains, as a general rule, paying capital gains can be optional, right? And I'm sure you all know about 1031 exchange. Hey, I got that. I know 1031. That's nothing new. What about opportunity zones? What about using certain types of trusts? What about using other structures? What are these things that we can do? We just had, right? So we're November 2025. There was an election in New York City that is poised to send another influx of United States immigrants down to Florida, into Texas, right? We always have land issues that are going on. We have, we just had it recently, right? Florida legislature, the law went into effect. Commercial landlords can no longer charge tax, right? There's no more sales tax in commercial leases. That's out. The landscape is evolving. And again, right, none of us can be fossils. We all have to continue growing. The market is changing. We have no idea what's going to happen in the midterm elections in a year. We don't know what's going to happen in the Florida election, right? When that comes around, we're going to have more people, more tech, more money. There's a massive amount of capital that's just sitting on the sidelines. We still have the condo issues coming out of the Champlain Towers disaster, right? Those compliance issues and HOAs and condo associations without sufficient funds. There's other things. There's other fun stuff we haven't talked about. Things like asset protection, right? Privacy. Yeah, it's the Sunshine State, but guess what? I can hide you in plain sight. There's so many fun topics out there. This is such an easy conversation. When you guys think of something you want to just have a quick chat or something like that, let's do this again. This is fun.
We'd love to have
That'd be
you. We'd
great.
love to have you back. This has been great. I know it's very, very informative. Absolutely. I mean, I've learned a lot just in this past 60 minutes. I mean, this is great stuff.
Yeah.
So
So
yeah,
what we'll do, AJ, we'll put all your contact information, everything in the show
yep,
notes.
awesome.
And we really appreciate you being on. And yeah, we definitely
Thank
will
you
have to do
so
more from.
much. Yeah,
Yeah.
thanks. Thank you so much. I
Absolutely.
appreciate this. It's a pay it forward concept. So if you got value out of this, right? I'm going to plug these guys. If you got value out of this conversation, like, subscribe, comment,
Yeah, yeah,
share,
yeah.
do all those good things. Like that, what they're putting out there to the fact that you're getting into this to help realtors get better at what they do. Like, congrats, guys. That's awesome. That's wonderful. I'm glad to be a little bit of a part of that.
Yeah, we're it's in its infancy right now. We are we're on Apple, we're on Spotify, we're on YouTube. We're getting there a little at a time, but we're growing by leaps and bounds, and we're learning as we go. But
Great.
it's very
Fantastic.
it's just great stuff. Yeah, and fun.
Thanks
Sounds
again,
good.
AJ.
Yep. Thanks so much, guys. Have a great weekend.
Hey, you
You
guys,
too,
thanks for
bud.
your time.
Take care.
See you
Bye
soon.
bye.
Pretty good stuff.
Great info. What a very knowledgeable guy. Very easy to speak with, and boy, very informative. And well, our realtor
You know,
partners, I mean, I think, Craig, a lot of times realtors, they see attorney, they say, oh, it's going to cost me a lot of money. I can't afford to do that. You really can't afford not to speak with somebody like AJ.
it's you got to have some good people, some good advisors, like that team he's talking about, and I think anybody that's getting serious about their business, there's got to be an attorney on the team somewhere, I would
For
think,
sure.
so yeah, so no, that was really good, and you can really tell he is a technical, attorney, but he is a business-minded, entrepreneurial, you know, guy looking to grow his business,
No, no.
helping other people grow their
He's just
business.
that some legal guy. This guy, like you said, he's
Yeah,
very entrepreneurial. He's looking to
correct.
grow, and he wants to partner up with the right
Yeah.
people. And he brought up some really great points for the law and in regards to Florida, what's going to happen in the future. And it's going to be interesting.
Yeah, no, we look forward to talking to him at some point again in the future. So it was really
Yeah.
great. So shall we talk about the weekly breakdown of mortgage rates?
Yeah. I mean, I had so much information. We ran a little long here, but rates. We had our earlier podcast earlier in the week about mortgage rates and kind of what's going on, but nothing really dramatic, crazy this week, and we're still kind of heading that low 6% range. Number of things.
So Bill, the government's back open again.
Yeah, I
Hey,
know.
um, we're back. The government is back to business. No more vacation.
No more
So
vacation. Yeah,
you know,
yeah.
so now the new schedule of when they're going to start releasing the economic reports is going to come out, and then we'll probably get a better picture of what's happening. I know the financial markets are a little um, worried right now. I mean, the stock market's having a bad week because they're concerned that now the Fed is less likely to cut in December based on
Yeah.
what they've got, and they don't have a lot of information. We haven't gotten a lot of the economic reports. So I think that's what the financial markets are going to be looking at is, hey, when are these reports going to get released? And then they can digest that information and see what's going to happen. So mortgage rates this week probably a little bit worse, not much,
Yeah.
but probably a little bit worse than they were the end of last week. Still a good situation as far as rates goes overall,
Yeah. Low
as low as
sixes
they've
and
been in the last
yeah.
years.
Yeah, low sixes, and if you FHA, VA, you could get into the fives, high fives. I mean,
Yeah, so it's still a great environment, and yeah, if you're a buyer out there, you can still negotiate with the seller to pay some fees to buy your rate down even lower if that's what's important to you in the negotiation. So yeah, but we'll wait and see. We'll have some more information hopefully about what's going on as far as when we'll understand more about the economic situation and
I think the
and
next
otherwise
week and a half, 2 weeks gonna be very interesting. We're gonna have these reports
in
coming
what
out,
way?
some information. We're gonna have Black Friday. I think these next few weeks gonna be very, very interesting to see what happens to the market and for 2026.
Yeah, no, it should definitely be interesting. I mean, there's a lot of things up in the air, and seems like the whole trade tariff thing is simmered down a bit. We don't seem to be China and US are not at each other's throats right this minute, but
Right.
one tweet can change anything, can change everything. So we shall see.
And I did see something on social media that there's a tariff on products from Italy at 107%. So they're jacking up the price of pasta. I'm not happy about that because it's only imported pasta, the good Italian pasta. So they got to do something about
That
that.
affects that affects my olive oil that I like too. So
I know.
yeah,
I only use the good stuff from Europe. Exactly. So yeah.
that's it. Yeah.
So
All right.
all good stuff. We'll see what happens over the next few weeks, right, Craig?
Yes, we shall see. And so, anyway, great week this week, and
Great week.
we
Absolutely.
will see you next week, or we'll see you at the.
See you at the closing table.
There you go. All right.
Have a
Thanks,
great
Bill.
weekend.
See ya. You too.
I see ya.